Welcome to Unit 10, Classified Financial Statements. The objectives of Unit 10 are to give skills necessary to demonstrate to prepare a classified balance sheet. Students will be able to define current and fixed assets and current and long-term liabilities. Students will be able to explain the importance of current assets when interpreting the balance sheet. And students will be able to prepare supporting schedules, including a statement of owner's equity and a schedule of accounts receivable. Students will be able to demonstrate an understanding of liquidity order and the cost principle. Let's take a look on page 173 of your textbook of a sample balance sheet. Please pause the presentation until you find page 173 and then continue the presentation. Looking at this balance sheet, ask yourself which assets will be consumed in the next few years. Which assets do we consider relatively permanent? Which debts must be paid within a year? Which debts must be paid in 2 or more years? Is there sufficient cash or assets on hand to pay debts? Now we need to talk about this new type of balance sheet called a classified balance sheet. On page 173, we're looking at what is called a classified balance sheet. It lists items in certain categories. Up until now, we've simply had assets and liabilities, but now we're going to split them up into current assets and fixed assets, current liabilities and long-term liabilities. First of all, what are current assets? These are assets that can be converted into cash, they can be sold, or they can be used up within a year. Some examples of current assets are cash, which obviously can be converted into cash instantly, government bonds, marketable securities, these are stocks or shares, and accounts receivable, and prepaid expenses, which we haven't studied yet. We'll be studying them in a later unit. Suffice it to say, expenses that are paid in advance, and we can turn those into cash relatively quickly. Current assets are listed in the order of their liquidity. How easy is it to turn these things into cash? So obviously cash would be first, and then the others would be listed according to how difficult it would be to turn them into cash. The new type of asset that we haven't discussed yet is fixed assets. These are assets that have a long life, longer than 1 year. Examples of these are land, buildings, equipment, and vehicles. Sometimes different companies call these plant and equipment or capital assets. It just depends on how they do their accounting. The fixed assets with the longest life is listed first. Fixed assets are recorded using the price at which they were originally purchased. This follows the cost principle. Now let's talk about liabilities. The first new type of liability is a current liability. These are liabilities that are due to be paid within 1 year or less. If possible, current liabilities are listed in the order that they are to be paid. Examples of current liabilities are accounts payable, taxes payable, salaries payable, and loans payable. Now, the opposite of current liabilities is long-term liabilities. These are liabilities that are not due to be paid within 1 year. Examples of long-term liabilities are loans that are payable in 2 years or more, and mortgage payable, which is generally 25 years or 30 years. Your assignment for today is to complete questions 13 and 14 on the web page and complete exercises 4 and 5 in your workbooks based on the question on page 182 of your text.